Welcome to our weekly market review. As per usual, I'm joined by Director George Glynos. George, the South Africans were the only ones who had late night celebrations this week. I mean, what a night the Bokke had in Paris on Saturday. But the Senate finally crossed a massive hurdle late last night in the showdown that is the US government shutdown. Most notably, the progress that was made was through a stopgap bill, effectively ensuring funding through end of January for some of the government employees. Pumped in a lot of certainty into markets. Obviously, it's still not a completely done deal. They're going to hash out the details later today, perhaps over the next couple of days, and then it's only going to the House of Representatives. So we're not there yet. 40 days and 40 nights later, and we're not there yet with the US government shutdown. But obviously for us domestically this week will be the big focus with the Government of National Unity's first MTBPS delivered by Finance Minister Enoch Godongwana. And I don't think I've ever had the opportunity to say this because this is quite a late MTBPS, so I can ask it this way. George, what is on your Christmas wish list for the MTBPS this week?
Look, let's just also first just preface that by saying MTBPS typically is more of a feedback session than it is necessarily a policy shifting session. That being said, I think they're under pressure to, at the very least, tell us that they have shifted the inflation target. So that's one thing that I'm hoping does come out of this. They might sort of kick the can down the road and say, oh, well, we're only going to change policy in February, but we're anticipating a shift in that direction. So they could desensitize the entire environment towards that and tiptoe us forward into the realm of a lower inflation target. But that's one thing I'd like to see. The other thing that I'd like to see is what the cumulative effects of more efficient tax collections the improvements in some aspects of this economy, like commodities, for example, like we've seen vehicle sales doing quite well. All of these are likely to generate a little bit more in the way of tax revenues. Of course, we're waiting to see what the consumptive demand will be going into the end of the year. With Black Friday coming up and of course the December festive spending season, all of those are sort of shaping up. But I think there's a couple of big points that we need to take out of this. The one is that the government has spent less because the budget was delayed by as long as it was delayed. So they were frozen in last year's budget and couldn't undertake any special projects. So the combination of those two will on its own ensure that things are slightly better than perhaps was anticipated in the early stages of the budget when it was announced when was it announced in the end? I think it finally cleared in about May or June or somewhere around there.
Yeah, somewhere around there.
Yeah, so I think on that basis alone, there's going to be some improvement. Then, of course, that rolls on to the big question about whether or not there is justification for a credit ratings upgrade. And so there's big debates going around in the market about this at the moment. I know the fund management community is a little bit, not concerned. It's a good concern this time around because the risk is that we get an upgrade rather than a downgrade. But why would that be? Well, one of the reasons would be that the government is gradually shifting some of the unfunded liabilities onto the private sector by privatizing many of these network industries. So they're removing the need to continuously bail out some of these SOEs that have been very poorly administered in recent years. The other is that, with the Reserve Bank targeting lower inflation, whether National Treasury likes to admit it or not, one thing that it has done is that it's assisted bond yields coming down. And with bond yields coming down, of course, there's a significant benefit there to National Treasury in that they issue bonds going forward at a lower bond yield. And that in itself helps to contain the interest on debt portion of the budget, then finally there's been a little bit of an upswing in this economy. So the combination of all of that, I think, stands South Africa in reasonably good stead. We're off the grey list now, so that's another risk factor that's been removed out of the equation. So when you look at these cyclical factors that are looking a little bit better, removal of the grey list, the possibility, people are talking about GDP growth being downgraded and all of this kind of stuff. It's going to be really, really marginal. I think the bigger impact is going to have been on the tax collections and greater efficiencies and less wasteful spending. Not to mention that we've got some good news in terms of the privatization of the ports, in terms of tax collection stuff. So there's some good news stories in there, and I think at the very least we could get some positive comments from the ratings agencies. It may very well translate into a credit rating upgrade. It would still leave us in sub-investment grade, but at least it would give the government pause to think about their strategies going forward and give them a little bit of something to say, look, you've done a better job, therefore here's your reward, and reinforce that kind of positive decision making and policy making. These are the things that we would like to see these credit rating agencies do. And I think for those countries that are able to implement fiscal reforms and do them properly, that there's likely to be real benefit that arises and accrues to that country. And if you want to stand out in a world which is gorged with debt and up to its eyeballs with interest payments on that debt, this would be a really good way to differentiate yourself, stand out from the crowd, find ways to attract capital because you are creating a virtuous cycle. And, that I think would be what I'm hoping for.
Yeah, like you said, there were several improvements, and we have to give that, some credit. But it's amazing what we can accomplish if you take ideology out of the equation. And that's how we got off the grey list. That's what's happening with the ports, like you mentioned. Eskom has shown an improvement. So there are things happening in the background. And on top of that, the Government of National Unity has managed to keep it together against all odds and all these headlines crying crises. They've managed to keep it together, just signaling real political stability going forward into 2026. Municipal elections will obviously bring in different flows in the background, but that could just add again to some positive news for these credit rating agencies to take and say, okay, we have an early Christmas present for South Africans this time around. So there's a lot going on for us, which we're thankful for, but we will keep an eye on the MTBPS. It's on Wednesday. George, I know we are but pushed for time, but yes, then we will chat again next week. Thank you so much.
Thank you.